Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, July 19th, 6 o'clock p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, well, I'm still showing correction there, but if you look over to the tail of the tape, it should be correction with a short-term uptrend after today's action. Let me get that fixed very quickly. Correction with a short-term uptrend because we saw very strong gains today. All 11 sectors in the S&P up, and I'm jumping the gun a little bit here, but I want to show strong gains getting us back above the 21-day moving average and the first close above the 50-day moving average since we had entered this bear market. And we're going to take a look at the charts, and we'll note the significance of that momentarily. Now, it's certainly not the coast is clear. Is the coast really ever clear in the market? I don't think it is. That's why they say the market climbs a wall of worry. But it is definitely important that we got above there, and it's going to be equally important that we stay above there. When you have big volume breakouts like this, the next couple of days after something like this happens are very critical. We've seen a lot of false starts as far as recoveries go during this bear market, and really all they ended up being was bear market rallies. And this may fail tomorrow, next week, or next month. But for now, we know that the wind is not, the long-term wind is still in our face. The short-term wind is at our back. And we're seeing some gains in the things that we've taken positions in. And ultimately, that is the most important measure of what's going on in the market. So you can check over here on the trend gauge. Market leader still showing neutral, but with a green arrow. Short term, because we've undercut, gotten back above, undercut, and then gotten back above again over the last 4 days. We're still showing this as neutral. We want to make sure that this doesn't blow up in our face. Green arrow obviously there. Medium term, one close above the 50-day doesn't get us off of a bearish downtrend. Technically, we need a weekly close, or I require 3 closes above the 50-day for us to get over to bullish on the medium term trend. Long term, we still got a long way to go before we reclaim the 200-day moving average. So still under a bear phase there. What just happened, I pretty much already talked about it. You can see the big gains here, G6. This is our 6 growth ETF proxy for the way we keep our finger on the pulse of what's going on with growth stocks. Strong day for that today, up 3.3%. S&P 500 up 2.8, NASDAQ 100 up 3.1, Dow up 2.4, mid caps up 3.3, Russell 2000 small caps up 3.5. Diversified Global 60/40 stock and bond index up 1.49%. In-house, we more than doubled our exposure today, up 1.03% on the day. We'll break that down momentarily. But let's now get to the tail of the tape and the charts. But first, let's take a look at the team here at Revere. Going to be some changes soon on this picture. What we do is trend following, meaning we participate in uptrends. You can see in our videos every night how we kind of flow like water with the market, bend like a tree in the breeze, however you want to identify it. But what we do is participate in market uptrends, back off during consolidations, get the heck out of the way during downtrends. Got a 10 percentage point lead on the S&P 500 this year because we recognized the issue back in January when we first broke below support. And there's been a lot of fits and starts since then, but still with a 10% lead over the S&P 500. If you're interested in this approach, we'd love to talk to you about it. You can email Dan, Tim, Hunter, Mural, or Don at revereasset.com. Or call 855-REAL-WEALTH. That's 855-732-5932. Now to the tail of the tape and the chart. So big changes here on the tail of the tape, brought on by the changes in the market indexes. Let me blow this up a little bit so you can see the S&P 500 here. We'll focus on this first. So Here you see we failed and broke below. We were long here on the 7th. We got back above the 21, held up for one day, failed the next day on the 11th, and then really a harsh 3-day sell-off. But when things were looking their bleakest, we held at this 3,700 support area, very strong. You can see with this line and look to the left of here, and you can see how it held here and here and here and here. Now we know that the more frequently that support and resistance levels are banged on, that it increases the area that they're broken, but sometimes the more they get banged on, a callus forms and you can't break below them, and that's what happened here, and that's where we are for the time being. Then we followed through last Friday with a gap up to the upside. That was on the 15th. First close above the 21. We took a couple positions. Yesterday we were following through to the upside, but let's go to the 5-minute chart here, and you can see gap up, everything's good, and then in the afternoon we got some bad news, a double dose of bad news actually from Apple, saying that they were slowing hiring and cutting spending, and that was enough to cause a very strong sell-off into the close. We'll go back to the daily chart here, and you can see, and what that did is take us back below the 21-day moving average. So we normally want 2 closes above for an uptrend. So there's a move above, now an undercut, now a move back above today as we gapped up in the morning and it turned into a trend up day, very strong day. As I said, 11 sectors up. You can see the gap up here. We consolidated for about 30 minutes and then boom, we just took off to the upside. Every attempt at a pullback was met with buyers. Couple of hour consolidations in here, but a very strong move to the upside. There was some decent participation by leaders. There were some other recent leaders that did nothing, but those were kind of the defensive type leaders that we saw recently, like utilities and defensive retail. And those didn't participate today, but that's actually a good sign. Signifies that money's flowing out of them and into more risk-on type areas. So back to the S&P 500, and what do we got? Not only a move back above the 21 and the 21 curling back up, but our first close above the declining 50-day moving average since we broke below it back on 421. So good stuff here. Now what's most important? Let's take a look at prior levels that we were happy to get above and how those turned out. Here's a move above the 21 day. Back on 527, we stayed above it for 8 sessions, very tight, broke down below it. Got above the 21, that lasted for 1 session, lasted for 1 session here again. Now 2 out of 3, Meatloaf said it ain't bad. Well, it certainly ain't bad if you close above the 50-day when you get back above the 21-day, and that's what we're looking at now. But what's very critical now, this was a big area that was taken out, this 3,900 area. We closed at 3,937. Any pullback needs to hold that. It'd be okay if we get a close below the declining 50-day moving average because we need this to flatten out and turn up. As long as we consolidate and hold above this 3,900 area, we're okay. So I'm not going to get overly concerned if we close tomorrow below the 50-day, but still above the 3,900 area. That would just be working off this big day move. Of course, if we rocket off to the upside because all the shorts haven't covered, we might see that too. And then we've got the 4,000 area and this gap fill at the 4017 area waiting for us overhead. So very clearly not out of the woods. We've still got the 200-day moving average 9.7% above today's close. So lots of work to do. We have to chew through all of this resistance over here. Got to get the moving averages. I mean, the moving averages are a long way away from having them configured the way we want to, with the 21 above the 50 and the 50 above the 200. So lots of overhead resistance here, but all rallies, all new all-time highs, got to start somewhere. And right now, this is the second highest close that we've had since the beginning of June. We had one. Well, this actually wasn't a close, so this is the highest close since this CPI gap down on 610. So highest close since then. we'll certainly take it. Let's go back to the tail of the tape and point out some critical items that we have on here. Nothing's changed as far as the headwinds are concerned. Put calls around a 1, no big deal there. VIX still relatively high. Fear and greed ticking up. It's now at a 34, but still in the fear range. So it's not like we've got everybody all bulled up and we're extremely bullish. So, but now we've got the battle of the bull case versus the bear case here, as we've got 2 out of 3 closes above the 21 after failing between July 11th and July 12th. So let's see how this resolves itself over the next couple of days. So news today at 2:25, and this is another good sign. At 2:25, we've been waiting for a vote on this semiconductor manufacturing bill called the CHIPS bill because our politicians are so clever. But announced that it was delayed. The 2 SOX indexes dropped, but they recovered by the end of the day. So another good sign. We were watching, as always, these support and resistance levels coming in to today. We gapped above this first support resistance level at the 21 EMA, and then we broke above 3,900 and, in fact, the 50-day moving average at this 3,900. I wasn't expecting. I didn't even have it on here as something that I was watching. Was the 50-day because of how far we were away from it, but broke above that resistance level too. On the S&P, on the NASDAQ, we gapped above this 50-day resistance area here. We started the day above the 21 on the NASDAQ, as we bounced there and closed around 290 on Monday night, but gapped above this resistance level and kept going. That was the 50-day slash 293 level. We closed up at 298, which you'll see on the chart right here, because I'm going to bring up the NASDAQ 100 chart. And here you can see the 50 and the 21 are tighter here than they are on the S&P. We had a failure against the 50-day here back on 7/8. We got above it yesterday intraday, failed by the end of the day. We actually took a short on the Qs when we broke below this 50-day yesterday. We got rid of that as soon as we got back above the 50-day. Never want to overstay your welcome on the short side, because you're not only losing money, you're losing against a rising index. Can't have that. So we're very quick to get off of our shorts when we're on the short side. So you can see here the powered above yesterday's high and above the 50-day moving average, actually a 1.9% cushion above the 50-day moving average for the NASDAQ 100 here. Coming into this 300 to 304 area. A little bit of resistance we're going to encounter there. We'll see if we can get through that. You can see especially this 7-8 day area here where the low is always around 302, 303, 304. So coming into some resistance there. Let's take a look at the Dow Jones Industrial Average. Reclaimed 2 moving averages as well. We had very similar to the S&P. We had a close above the 21, a negative reversal off the 50-day, close back above the 21, but then gap up today, reclaiming the 21 and the 50-day moving average, coming into this 32,000 area, which will be some resistance on the Dow Jones Industrial Average. Now let's get to the leaders on the day, the mid caps and small caps. You can see this is actually the first close above the 21 for the mid caps. You can see we closed right below it here, got above it intraday yesterday before closing below it, and now today, Tuesday, above the 21, closed right on the declining 50-day moving average. That's mid caps. Let's go to small caps. Closed right on the 21 on Friday, ran into the 50-day and failed on Monday, and a close back below the 21, reclaiming both of them today. So some good news there, up through the 50-day moving average. But again, on all of these indexes, we need to be keeping an eye on how they handle the next couple of days, because when you break out of a range, what's to be determined is if it was a bull trap or if it's the beginning of a move higher. And that's what we'll be hyper focused on over the next couple of days. Let's go back to the tail of the tape to see how the rest of today played out. As I said, closed near the high of the day after a trend up day. I do want to note this, all of this move up, this may be the most important chart, the US dollar, this 3 candle combination right here on the 13th, the 14th, and the 15th. This is called a evening star, which means you're in a strong uptrend. You get one last hurrah, and then you have a negative reversal on that when you're extended and everybody's euphoric about the dollar. And then the next day you reverse below and back into the prior candle. So this 3 candle combo is called an evening star. And what has happened is we've had 2 consecutive strong moves down off of that combination, but we did bounce today at this 2840 level, which is the 21-day moving average on UUP, which is the ETF that trades for the US dollar. So let's take a look back over at this on, let's take a look at a 15-minute chart for this. This is the US dollar. Now I'm going to bring up the S&P 500 short ETF, as you can see how strong the correlation has been between the dollar going up and down and the S&P 500 doing the inverse. Focus on when things really started to get in sync on July 13th here. So for the last 5 or so sessions, there's your SH, that's the short S&P, there's the dollar. Really, it started back here on the 11th with the gap up on the dollar. That was a gap up on the S&P on the SH, which meant a gap down on the S&P 500. So they've really been in sync since 7/11, and we need to see if they stay in sync. Note how the strong dollar or the strong sell-off on Monday's close coincided with a strong move up in the dollar. These just have really been synced up since July 11th, and we need to see if they stay synced up or if they separate somewhat, because if the dollar continues its bounce off the 21 and goes higher and we stay correlated with the indexes, this bounce is going to be short-lived. So very important to keep an eye on that. So let's get back to the daily chart here. Let's get back to the tail of the tape and finish what's important here. So indexes also something else bullish. We're going to have an 821 cross on these. That hadn't happened since we got back above the 21 here at the beginning of June. So again, every little bullish piece of information we're weighing things every day, the weight of the evidence, and we're trying to determine what odds favor. And 8 crossing through the 21 is a short-term bullish signal. So just another check mark in the column for the bulls. So as I said, sectors today, 11 out of 11 up. Jets also strong, biotech strong, semiconductor strong, banks strong. What was weak today? Bonds, not much weak, but bonds, DBA, which is agriculture commodities, and defensive retail like the dollar stores and Ollie's, BJ's. Anywhere you go to save a buck, money was flowing out of them today and into more growth related sector. So let's talk about the changes that we made in the portfolio today. The first one I mentioned, we sold QID. That's a NASDAQ 100 short. As soon as we got back above the 21-day moving average, never want to overstay your welcome on the short side, as I mentioned. So we came into today with a volatility adjusted beta of 0.27. By the end of the day, we're up to 0.6. This is the equivalent of a 60% S&P 500, 40% cash portfolio. So a beta of 0.6. We added to our position in SSO. We've got a 25% position in SSO and bought our first 2 stocks. And let's go over those charts right now. CLR was the first one. You find a better looking oil chart than this, let me know about it. I know Oxy is close, but people have stopped talking about oils. Quite a few of them came down, broke below their 200-day moving average. This one held up very strongly. So then it stands out to us, superior relative strength as far as oil stocks go, and a move back above this 21-day exponential moving average. So looking good there on CLR. And also we bought CELH, which is Celsius. This has been a leader, a recent leader in here. Move up. You can see this nice breakout here on 7.5, pulled back for a couple days as the market wasn't quite ready. Big move out, another high on 715, but an outside negative reversal yesterday. But gathering itself, closed right on the 80 MA, never even touched the 21 since all the way back here on 630. So looking good on Celsius. So those are our first two positions that we bought today. Oxy and the 2121 from last Friday, there's quite a few coming into reasonable buy points that we're going to keep our eyes on over the last couple of days. And let's wrap up the tail of the tape here. And bottom line it for you. Strong gains, reclaim of the 21, first close above the 50-day moving average, short-term uptrend, still aren't out of the woods yet with the correction as we're below the 200-day moving average, but now challenging our mid-term, our intermediate term guidepost, which is the 50-day moving average across the major indexes. And as long as what had been leading and some leading stocks continue to come to the fore, we'll continue to dip a couple more toes in the water. And basically what we do is finance our gains as we get higher. As our portfolio makes progress, we'll get to a point to where we're break even. Every time we dip a toe back in the water, we don't want to lose more than 1 to 1.5% on the downside. We're up maybe a percent, between a half and a full percent on this attempt since we got back in. That gets us closer to break even. At some point, we'll move all our stops to break even, and this will be a risk-free ride as we go higher. If all of our stops got hit, then we'd be above where we started. So that's the way we play it, financing our gains. Next to look at on the upside is this 3980 to 4000 area. That was a March 2021 breakout, which we gapped below on June 9th. So revisiting that 6 weeks later now, and we'll see how the rest of the week plays out. As you can see, these various support levels being what were resistance levels being reclaimed one by one. So probably the most optimistic action that we've seen on the indexes since this move back here above the 21 at the end of May. That was undone by a bad CPI number on June 10th. So it is what it is. We keep an eye on the market, and for now, we don't have all the wind in our face. We've got a little bit of tailwinds, and we'll see if we can take advantage of it. So wrapping up today, July 19th, as always, reach out to me. Email me, don@revereasset.com, or you can call 855-REAL-WEALTH. Wrapping up Tuesday, July 19th, this is Don Vandenbord with Just the Facts, no opinions. It's not how much you make in the market, it's how much you keep. When the market's going higher, we want to make it. If the market turns lower, we want to make sure we keep it. That's our approach here at Revere. Give us a shout if you're interested. Thanks for listening and have a great day.